Good day Forex trader. Your USD Forex signal, cup and handle and bullish flag forms. Because of the bullish flag and the cup and handle pattern, there is a likelihood that the pair will have a bullish breakout to above 1.1500. Bullish view. Buy the Euro USD pair and set a take profit at 1.1525. Add a stop loss at 1.1380. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.1420 and a take profit at 1.1350. Add a stop loss at 1.1450. The Euro USD pair tilted higher on Thursday morning as focus shifted to the upcoming U.S. Consumer Price Index, CPI, data. The pair is trading at 1.1440, which is about 40 basis points above the lowest level on Tuesday. U.S. consumer inflation data. The main catalyst for the Euro-USD pair will be the upcoming inflation figures that will come out on Thursday. Economists polled by Reuters expect the data will show that the headline CPI slipped from 0.6% in December to 0.5% in January. On a year-on-year basis, however, they expect that the CPI rose from 7% to 7.3%. If they are accurate, that jump will be the biggest one in more than 40 years. Excluding the volatile food and energy prices, analysts expect that inflation increased from 5.5% to 5.9%. Still, analysts believe that the real inflation is higher than what the official number is saying. For example, the prices of individual items that Americans buy often like cars, meat, and paint have risen by double digits. While the supply chain challenges are easing, the price of crude oil is rising. That means that the overall prices will keep rising in the coming months, especially if the geopolitical issues between Russia and Western countries escalate. If the numbers are strong, it will give the Fed more impetus to continue tightening in its March meeting. Besides, recent data showed that the country's labor market continued to tighten. The economy added over 467,000 jobs in January after adding another 550,000 in the previous month. The unemployment rate rose slightly to 4%. The other catalyst that will have a mild impact on the Euro/USD pair will be the Riksbank interest rate decision. The bank is expected to leave interest rates unchanged and hint about hikes later this year. Euro-USD forecast. The Euro-USD pair jumped to a multi-week high of 1.1482 last week after the ECB decision. This week, the pair retreated slightly as investors assess the impacts of a hawkish Fed and ECB decisions. It has formed a bullish flag pattern and moved slightly above the 25-day and 50-day moving averages. The Relative Strength Index, RSI, has moved slightly below the overbought level. Therefore, because of the bullish flag and the cup and handle pattern, there is a likelihood that the pair will have a bullish breakout to above 1.1500. GBP USD Forex signal, sterling recoils after bow warning. The pair will likely keep falling as bears target the second support of the Andrews pitchfork tool at 1.3485. Bearish view. Sell the GBP/USD pair and set a take profit at 1.3480. Add a stop loss at 1.3625. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3550 and a take profit at 1.3600. Add a stop loss at 1.3500. The GBP USD pair declined slightly after an important warning by the Bank of England's chief economist. The pair declined to a low of 1.3537, which is slightly below this week's high of 1.3586. BOE chief economist warning. The Bank of England has become one of the most hawkish central banks in the developed world. It has already hiked interest rates 2 times in the past 3 months in its bid to lower inflation. The rate hikes happened also as a response to the strong economic data from the UK. For example, the country's home prices have jumped while the unemployment rate has declined to about 3.9%. In a statement on Wednesday, Uphill, the BOE's chief economist warned the bank against raising interest rates aggressively. He advocated for a gradual pace of rate hikes in order to prevent shocks to the economy. He also warned that the market was overestimating the scale of monetary tightening by the bank. Generally, analysts expect that the bank will implement at least 3 more hikes this year. In the statement, he said that keeping rates at 0.5% indefinitely will leave inflation above the bank's target in the medium term. Andrew Bailey, the bank's governor, will deliver a statement later today. The next key catalyst for the GBP-USD pair will be the upcoming U.S. Consumer Price Index, CPI, data. Analysts expect the data will show that the headline CPI jumped to 7.3% in January as oil and gas prices rose and the supply chain disruption continued. Excluding the volatile food and energy prices, analysts expect the data to show that prices rose from 5.5% to 5.9%. The GBP-USD will also react mildly to the latest initial jobless claims data from the U.S. GBP-USD forecast. The 4-hour chart reveals that the GBP-USD pair declined after the statement by the BOE chief economist. It declined to 1.3530, which was the lowest level since February 8. It also declined to the 38.2% Fibonacci retracement level. Additionally, the pair has moved slightly below the 25-day exponential moving average while the relative strength index has retreated. Therefore, the pair will likely keep falling as bears target the second support of the Andrews pitchfork tool at 1.3485. On the flip side, a move above the key resistance at 1.3600 will invalidate this view. AUD-USD Forex signal, profit taking can't be ruled out. The pair will likely keep rising as bulls target the next key resistance level at 0.7250. Bullish view. Buy the AUD-USD pair and set a take profit at 0.7280. Add a stop loss at 0.7100. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7170 and a take profit at 0.7100. Add a stop loss at 0.7250. The AUD-USD bullish momentum continued as investors continued cheering Australia's reopening plans. The price rose to a high of 0.7195, which was the highest level since January 21. It has risen by almost 2% from its lowest level on February 4. The main catalyst for the AUD-USD pair is the recent reopening decision by the Australian government. Earlier this week, Morrison's administration said that it will allow double-vaccinated foreigners to visit the country. That decision was welcomed by many Australians and the business community since the country has been locked to the outside community in almost 2 years. Therefore, analysts expect that retail sales will jump as businesses serve tourists and residents. Most importantly, hotels and restaurants are expected to report strong growth considering that foreigners are the biggest spenders in hotels. Data published this week showed that the services sector is doing well. As such, reopening will add fuel to the fire. Meanwhile, the pair rose after the strong earnings by Commonwealth Bank, CBA. In a statement after earnings, the bank's CEO said that the economy will continue doing well until at least 2023 barring any more lockdowns. He also urged that the RBA should gradually hike rates in a bid to prevent the economy from overheating. Recent data suggests that some sectors like housing are getting substantially hot, with prices in key cities surging to record highs. CBA expects that inflation will average between 3% and 3.5% this year. It also expects that the bank will hike interest rates to about 75 basis points later this year. The AUD-USD pair will then react to the latest U.S. consumer inflation data. Analysts expect that the data will show that inflation jumped to about 7.3% in January while core CPI rose to 5.3%. AUD-USD forecast. The 4-hour chart shows that the pair has risen in the past 8 consecutive 4-hour sessions. It is trading at 0.7190, which is the highest it has been since January 21. it has moved slightly above the 61.8% Fibonacci retracement level and the 25-day and 50-day moving averages. Further, the pair's relative strength index, RSI, has moved to the overbought level. Therefore, the pair will likely keep rising as bulls target the next key resistance level at 0.7250. On the flip side, a move below the support at 0.7150 will invalidate this view.